It is no longer news that investing in the stock market is the best decision you can make in 2026. Now, the stock market has not just produced millionaires and multimillionaires, they've given some families generational wealth. So, today we'll be looking at three other investments you can make in the financial markets and still earn profits and dividends without buying a single stock. Yes, you can be a player in the financial market, in the capital market, and make investments and make money without buying a single stock directly. Welcome to Clockwise, and today's conversation will be kind of two parts. The first part will be a critical analysis of every stock we had actually analyzed on this channel. We'll look at where they are now, look at their current level, and if it's still okay for you to buy. And second part of this conversation today, we'll be looking at the three other investments you can make in the financial market or in the capital market and still make profit like you're making profit in the stock market. My name is Providence, and as usual, I have a guest that does not need introduction. Please, with a resounding virtual round of applause, welcome Mr. Kade. Welcome to Clockwise.
Thank you very much for having me always.
Today you actually prepared. You came with the chat live and direct.
Yes, I came with the chats.
I think we're going to share this chat with
Yes, we'll share this chat. Yeah,
okay, now our conversation will have 2 points today. First, we'll do an analysis of the various businesses and various stocks we'll be analyzing so far, and we'll look at the journey so far and where they are now currently, and we'll also look at the other path of the conversation, which will be the other three investments, because people actually feel that the financial market is just about stock buying, stock investment. There are other forms of investment you make in the financial market and still make money. So let's sort of start from where we want to start from.
Okay, thank you very much. So it is important that we review from time to time some of the calls we've made on this channel. Not that we are making any recommendations, not that we are making any financial advice, but sometimes from what we look at on the charts, we try to share with you guys what we are seeing and what we think based on charts and technicals as well as fundamentals, what we're seeing. And so there is a name that we have been mentioning. I'm going to start from from some of the recent names and then work my way up to some of the old names that we mentioned. And so we have been since February 28th when US invaded Iran in what we call Operation Epic Fury. We have been talking about oil stocks. We have been mentioning that oil stocks, we've been looking at the fundamentals and knowing that oil stocks will jump seriously. And so, although we have added some caveats, we have always been very clear on the caveats that invest in oil stock very carefully. And the reason why we've said that is that, and I remember mentioning that the moment the conflict or the blockage of the Strait of Hormuz is cleared, then you might see a very significant downdraft in the price action for most of those stocks. But let us look at while the impasse is still ongoing. If you had invested in one of the names we mentioned, which was Ardell, from what I'm seeing here, you would have made at the time we called it was trading at 1,100. Currently it's trading at 1,649. That means we'll be sitting on 49.9% return on investment.
Wow.
Meaning really that if you had invested let's say ₦1 million, you'll be sitting on 1.4 or literally 1.5 million.
Yes.
On your investment, which is a decent investment, thinking about the fact that this is just about 2 months since we made that call. So, so for those people who maybe took it, I think you should be sitting on some nice profit. But like we said, you want to take profits. You want to take profit at this point because there's some negotiations going on between the US and Iran. The moment that negotiation goes through, we might see in a single day, we might see the likes of West Texas Intermediate, it might crash more than 20% in a day. Because most of this oil, and of course, if the crude oil itself comes down very sharply, that would also affect stocks. So what I'm doing currently is to take profit. I'm taking profits massively on some of these oil stocks. Then the next one we also mentioned was Seplat.
I'm very shocked. I'm very shocked about Seplat. Like,
I mean,
how many days? Like, how many years ago?
It's quite. But the fundamentals are there. The fundamentals are very clear. Like we say,
Not 10,000 naira per
it's
share.
more than it's 10,450 naira per share. That's insane. This is something we called at a little above 8,000.
Yes.
8,500. When we made the first call, it was roughly about 8,500.
Yeah.
Now it's 10,450 naira per share. That's more. That's more than a 25% return on investment. Yeah. So if you had made that call, you should be. Let's say you put in $1 million also, you'll be sitting on 1.25 million now. Yeah. So, but again, like we said, it's time to take profits. It's time to
It's not time to buy.
It's not time. No. It's time to take profits. Yeah, you want to take profit because people get some positive feelers from the negotiation, US-Iran negotiations. Yeah. You need to take profit. It's very important you take profits because it might crash very scandalously. And again, by the way, if you are a leverage trader, you might be looking at taking a short position, and that is what I might be considering, opening a short position on these names, because again, like I've told you, there are a ton of imbalances downstairs. If you look at, we're going to put up the chart so you guys can see, but there are so many, the imbalances downstairs, at lower prices, that are very crazy. So prices would almost always want to come down. Like I've said, imbalances are imperfection in the market, so prices would want to come down. Then let's also go to MTN. MTN, we will talk about MTN. MTN is a name that we mentioned since the beginning of this year. When we talked about names we should be considering from the beginning of this year. We started talking about MTN at below $700 per 700 naira per share. Now it's sitting at 825 naira per share. And maybe by the time you see this video, it might have gone further than that. But the figure we have there is 825 naira per share, and that is about 19. Not really a nice place, not the optimal place. Though it has filled an imbalance. I'm looking at the chart now. It's filled an imbalance, a very serious imbalance that we had. But I would still look for some retracement, though. If I'm going to mention, I'm already in the trade. But if I were going to do a scaling, I would look at an imbalance between 700 and 700. Let me see what we have here. 700 and 742. That is the first. Then there is a very large imbalance also from 682 to all the way down to 561. These are all zones that the market could come back to fill in some of the unfilled orders. Yeah. So I would be looking at all those. That's a deeper retracement which you can look at.
So is it a nice place to buy now?
Like I said, if you are looking at dividends, well, but if you are looking at return on equity, like I've told you, I think a better place. I think it's, if you ask me, I think it's overpriced at this point. MTN is on a recovery. I'm going to say that with a caveat. MTN is on a recovery rally. MTN suffered last couple of years. They have been suffering very badly because of the FX liquidity challenge. So it's on a recovery rally. That doesn't mean it cannot retrace, because it has done massively. So it can retrace, and I just gave you the price points that I could be looking to for re-entry. I will be looking at some of these imbalance fields. When we show the chart, you are going to see. But for want of time, I don't think. We can consider one more name that we mentioned that has actually still done very well for us. A name. Guinness is still on a good name, a good call for us. The banks, we had mentioned the bank. The banks are still in a decent. Zenith Bank, for instance. The first time we called Zenith Bank, it was trading at below 94. Below 94, we called Zenith Bank below 94 naira. Now it's trading at 126. Okay. That's also a very good one. It has done a very good, a decent return on investment. I'm looking at Zenith Bank could still run, but speaking as a trader now, I will still be looking at maybe to enter at. There's still a very serious imbalance field all the way through to below 100 naira In fact, all the way down to even below 90 naira per share.
It's coming back to feel it.
So I'm looking at it coming back to, especially it has to come down to 110 because there is a very serious imbalance, that really needs to be filled. Just above 100, at least that should be filled.
Okay.
The other ones will happen with a deeper correction. So these are some of the names. So we have actually done well. If you are actually taking some of the calls we made, I think you should be sitting on nice profits, and there might be a time for you to all stocks. Please, you need to take profits. The development we are getting is that very serious positive outcomes are coming from the negotiation. So you have to take profit, because if you don't, you might be witnessing very serious.
The market will take profit for you.
Like I've always said, if you don't take profit, the market will take profit for you. Take profit. It might be a good time to even consider a short position. Yeah. Yes, so
that's why we said, okay, you have to subscribe to this channel, because we give you live updates. We give you deep research updates. Now, you've seen the chart, you've seen the stories, you've seen the projections, and you've also seen the corrections. So at this point, if you're doing oil stocks, you can actually take profit at this point. And let's wait and see what comes out from this negotiation between US, Israel, and Iran. Now, to today's conversation.
Okay.
Now, many people don't understand that it's not only stocks that are used in making money in the financial market. There are other ways to make money from the financial market. Most people don't have this patience to actually go through analysis the way you do, to actually go through fundamental, but they want to invest their money. So how do you invest money in the financial market without actually buying stocks directly?
Okay, so I've always said it. I remember there was a question one of the audience asked, how do I start as a beginner? The answer has always been, I've been very consistent in this regard. The answer has always been, you want to do a broad market index. Yeah. For example, exchange traded funds. That's the best way I advise. Yeah, ETFs. That's the short form for it. Exchange traded funds or ETFs. These are the best instruments you can buy, because with ETFs you don't need to pick and choose. Most of the ETFs track the performance of the broad market. So it's like you pull markets together, pull stocks together. So they invest across all of these.
For you.
Yeah, for you. So you are, for example, the first ETF we're going to mention, which tracks the top 40 companies in Nigeria that are pension compliant, actually invest across all of these names. So the ETFs present a vehicle that can allow you to invest without having to look at a single chart. Okay. I was with someone last night, and I showed the person, I said, listen, even if you don't want to read I read annual reports, I jump on earnings calls and all of that. But even if you don't want to do any of those, you can still make money from the market. And that's by investing in ETFs. And then I did something for the guy. I told the guy, bring your phone. He brought it. Said, just go online, compound interest calculator. We started with I think we did $10,000. He asked me, he said, I don't want to do, I just want to put in something and forget it. I said, okay, let's say you have a child that is born today. In 15 years, your child will be you should be in the university. And then you want to have something to be able to sponsor the child to some of the Ivy League schools. Okay, so what do? I said, put in $10,000. Put in $10,000 with the compound interest calculator. We did $10,000. I think we did. Then we did, okay, let's say S&P 500. But as we're going to see now in this, you will see that the average return on Nigerian ETFs.
Let's talk about Naira.
Nigerian ETFs. But I mean, I just try to say this so that even if you don't, Nigerian ETFs even return better. But let's just say, I like to underestimate returns. Underestimate. So if I'm underestimating return, let me use the S&P 500, which is 11%. So I said, if you do S&P 500,
some ETFs in Nigeria pay 20%.
Even more.
Yes.
We are going to look at some of them. But I just want to say, you want to say the worst case scenario. Worst case scenario, that's what I'm looking at. So 11% for a period of 15 years, starting with $10,000. What did we make as a return on investment? I think everything came up to around about 31,000 in profits, something in that neighborhood. That's what we made without touching you just made a one-time investment, allowed compound interest, which, by the way, Albert Einstein says is the eighth wonder of the world. Allow it to work its magic, and then you had $31,000 sitting for you. at the end of 15 years.
Let's start.
So,
Number one.
let us look at the first, coming back to Nigerian ETFs now. The first one we want to look at is the Stanbic IBTC Asset Management Limited Pension 40 ETF. Now, what is this ETF? Is the ETF is actually by, of course, by the name Stanbic IBTC.
By Stanbic IBTC Bank.
Yes, and that actually tracks the top 40 companies that are pension compliant in Nigeria, meaning they are PENCOM compliant companies. You have the likes of names like Airtel, like MTN, like Dangote companies, like those are compliance companies. So the top 40 companies, last year it returned 122%. Yes, that's why I told you that if I'm going to mention those names, you realize. So they mentioned 122%. And by the way, 2025 was such a good year for the Nigerian stock market, the Nigerian capital market in general. Because though I'm going to mention some of these, but ETFs alone returned 48% on average. As a matter of fact, out of 12 ETFs that we looked at, 11 of them were positive. So it was a very good year. No matter where you put your money into, you would have made 2025 should have made you a lot of money.
And we are seeing some signal 2026.
And we are seeing some signal 2026 because if you look at some of the names even the names that we mentioned, there was a name that we mentioned, I think, a couple of weeks ago, and that name is already a week ago. By the way, that name is already up 10%. So that for me is a good sign. There is a lot of recovery. Most of the companies are recovering. Most of the names, Nigerian names, are recovering from the downbeat that they had in 2023, 2024 because of the exceptional effects as well as inflation issues. Stanbic IBTC Asset Management Limited. That is, if you the ticker symbol, the symbol is SIAML. That is SIAML. Sorry, SIAML 40. So SIAML IBTC. SIAML Pension 40 ETF. And I'm saying this so if you want to look at it on TradingView, you can actually see it. Okay. So you can actually look at the performance of. Most of these things I tell you.
Is it a nice place to invest?
Though I mentioned, yeah, it's a good place.
It's a nice place.
It's a good place. I have it here. I have the chart here, so we can actually look at it together. So if you look at what we have here, you have that. You can see that it's a good place. We are currently at 12,299. If you look at it, actually retraced into a demand zone from where it has actually gotten.
We show the chart.
We show the chart, and then you see that it actually has filled an imbalance, tapped into a demand zone, and it is going back up. Yeah. So we expect it to make a good. The best place you would have actually gotten into maybe would have been 9,000, about 9,200 and about 9,200 in the neighborhood of that. But this is still a the next imbalance I expect will be around imbalance field will be around, but that one would need a very sharp drawdown. Would be around 4,595. That would be but that would take a very serious drawdown, maybe more like a Black Swan event for that to happen. But you can still, like we said, you don't YOLO in complete. You actually do dollar cost averaging. But I'm telling you, the best price I would put in my last limit order would be at exactly 1,000. I will put it at 1,000 at 4,347. Then if you are a trader, then you will also want to put out your stop loss at 3,058. But I would want to refine. That would be too large a stop loss. I would want to refine it. But that's speaking technicals. So SIAML ETF 40. That is the ticker symbol. That is the number one. The next one is still Stanbic IBTC though, because we are looking at the top three. So these top three, by the way, we have two types of ETFs. We have the bond ETF and when we have the equity ETFs. Bond ETF has to do with investing in the bond market or bond instruments, but equity ETF has to do with investing in stocks, company equities. So the one that like this SIAML ETF is actually a stock ETF actually. Equity ETF, yeah. Then the next one is still Stanbic IBTC ETF 30. 30. That is, it tracks the top 30 companies. We call it large cap ETF. So it tracks the top 30 companies in Nigeria. So it did 136%, even more than the SIAML, because because of the rally we had for large caps. Large caps did a ton of return last year.
Okay.
So because of that, it actually rode on the success of those large cap and returned 136% last year. And so if you look at it, it actually, for me, it's good for your portfolio. It increases the Sharpe ratio of your portfolio, but there's a caveat though. Because it is 100% equity, it's not equal weighted. Let me say that one more time. It is not equal weighted. What we mean by equal weighted is, for example, out of those 40, let me give you an example. If you 100%, if you divide 100 by 40, that should give you 2 point something, Abi. Good. So that means that 2 point something percent of all the companies should combine to give you to give you the entire basket. But that is for equal weighted ETFs. But because this one is actually not equal weighted ETF, meaning that some of the largest companies have more influence on the equity itself, on the index itself, rather than an equal weighted index. So the risk in that regard is that if there's a drawdown like we had a couple of years ago, if there's a sharp drawdown, because even that last year, it actually went down 38%. Yes, because the reality is that it is so weighted, though large cap weighted, it is actually 100% large cap, but it is so equity weighted that a drawdown on equities will draw down this particular ETF.
Right. Let's not go too technical.
Okay. I mean, but that is also an ETF that you can also be looking at.
Okay.
The return on investment. It's actually good to invest in. You might want to wait for a little bit of a retracement before you enter. Like I said, I don't want to make it too technical, but it's a good place. The last one will be Vetiva. Vetiva it tracks top 30.
Okay.
Yeah, it did 43% last year. And then it also benefits so much because it's the largest. It has about over 40% of total ETFs. So it's the largest ETF by assets itself. By the assets that pull together, it makes up over 40%. So Vetiva that's why it's a little bit more stable.
What is it symbol?
It's Vetiva too.
Okay.
Yeah. When an ETF is large, there is that, compared to the other ones we just mentioned, it is a little bit more stable. That is also why it has a smaller return on investment. So we have what we call high beta plays, like the likes of Stanbic large cap is high beta play, but Vetiva is actually it's more stable because because of its share size. So you might want to allocate to this also. The idea generally is that I don't even tell people to allocate to just one ETF. You might also want to spread your tentacles. Spread across the top three we've mentioned. There is also Meristem. Someone asked
Meristem.
Someone asked Meristem. Meristem is also there, but Meristem is not. It's number 4 on the list.
Number 3.
Top 3. We have mentioned the top three,
yeah.
But the number 4, which is Meristem, is also there. And last year, it did 7.7, a little above 7% return on investment. So, you can also, just for purpose of diversification, you can also consider that too.
Let's go over the list again.
So the list is number 1, SIAML, that is Stanbic IBTC Asset Management Limited, 40. Then you have, which is pension, top 40 companies that are pension compliant. Then you have Stanbic IBTC ETF 30, which tracks the top 30 companies. You have Vetiva, which actually does 30 companies too. Then of course we have of course I like an honorable mention, I mentioned Meristem. That is for Nigerian ETFs. Yeah, Nigerian ETF. Maybe I could just flash. If you are the guy that actually likes to earn in dollars too, then you can also look at the VOO for S&P 500. It's Vanguard, a broad market index for S&P 500. By the way, S&P 500 is hitting my target. I had a year-end target of 7,300, and we'll be saying it on this channel, 7,300. We are currently at 7,149. So I'm telling you, I'm very serious. We're going to even surprise it. When I remember you were asking me when we had a downdraft to 6,312, 312, you told me, is that we have lost your share. I told you, listen, we are not done with the year yet, and we are back above 7,000, even 7,100. So we are hitting
that argument outside. When we are through with this particular program, we'll go outside and we'll talk about that particular. All right, now before we go, give us just two reasons why people should actually invest in ETFs.
You don't have to do the hard work.
The hard work, that's one.
It actually helps you. You don't have to do the hard work. Number one. Number two, the way ETFs work is like I told top companies, meaning that if a company underperforms, it remove another company. So you actually save. So you are relatively safe, you know. So ETFs, but also ETFs might not return as good as investment. Someone will tell me, last podcast you said that Guinness did 398% in 2025, and then you're telling, yes, it's possible. Before you begin to think about picking names, start with ETFs. Don't get your fingers burnt.
Especially as a beginner.
As a beginner, please start with ETFs. Right. That's why we are taking this time to tell you some of the ETFs we can actually get into. All
right, thank you very much for coming. As always, I know you sleep on the chat. So you brought the chat to sleep on it here. All right, thank you very much. And I think we should end it here and continue the conversation in our next episode. On that note, we'll come to the end of today's episode of Clockwise. I know you've seen it all, that what we projected some few weeks ago, they're actually making money. And those actually investing in oil stocks, I think it is time to take profit so that the market will not take profits for you. And if you're just starting in the financial market, you can start with ETF and follow this channel, and we'll show you how this journey goes from your point zero to point success. My name is Providence, and please do not forget to like, subscribe, and also put a notification bell on this channel, because we bring amazing content you will not see anywhere. And also do not forget that the elite of the 21st century are not those who did not go to school or those who will not go to school, but are those who have refused to evolve as their environment is evolving. My name is Providence again. See you again.